Good morning, everyone, and welcome to this session focusing on crowdfunding and the process and so forth, and equity financing in general. Before we start, I just wanted to introduce myself. I am Dr. Winsome Leslie. I am CEO of Dev Solutions Consulting, which is a consulting firm based here in the US, where I sit focusing on facilitating access to finance for micro and small businesses. And I'm the consultant that's been assigned to the ECSRC Equity Crowdfunding Project to focus on awareness raising and training. Before we start, I'd like to have everyone just introduce themselves briefly. I know you might want to have your camera off for most of the session, but I'd just like to have everyone introduce themselves so we are talking, as a group. So I think I'll start with Ramona, who's actually on camera now. I think Ramona might have gone to one of my other sessions, because these are 4 sessions we're holding, each covering the same material. We have 4 cohorts, rather, covering the same material. And I think, Ramona, you might have been in a previous cohort, or am I mistaken?
No, you're right. Hi, good morning. Happy New Year.
Happy New Year to you. Hi. Nice to see you. Nice to see you.
Thank you. I actually got this link and I wasn't sure if it was a continuation of the last training, or if it also you don't need me then.
No, you can sit in. The thing is, the situation, the way it is structured, it's 2 sessions covering equity financing and equity crowdfunding. And we are delivering those 2 sessions to 4 separate cohorts of entrepreneurs. That's how it works. But you're welcome to stay.
I'm fine. But thank you. Nice seeing you again.
Nice seeing you again.
Enjoy the class, everybody else.
Thanks.
Bye.
Okay, I'm going to switch to Kadeen. I hope I'm pronouncing the name properly. Karine is disappeared off camera. Okay, Corey, would you mind introducing yourself?
Hello, good morning, everyone. It's Corey here from Grenada.
Could you turn your camera on just for a sec so we see you?
Oh, I would highly advise.
Oh, you're not camera ready. You're not camera ready. Okay, fine. Just let us know about your business then. Let us know about your business.
So we have a digital marketing agency based in Grenada. We're also involved in software development. So we have a travel application here as well.
Oh, excellent. Welcome and Happy New Year.
Thank you.
Gabby. Is Gabby on? Okay, we'll come back to Gabby. Norman.
Hi, good morning. It's Norman.
Morning. Happy New Year.
Happy New Year to everyone. I'm actually from Montserrat. I'm a multifunctional business in the hospitality industry. We do tours, we have accommodation, we rent equipment, do event management, lots of different things. But I'm just here trying to get some more information on crowdfunding and to see what the possibilities are, more or less.
Excellent. So you would have actually, I'm sure you know Narissa Golden.
Oh, yes.
Right, because we talked about we had a radio show with her as host, I think 2 weeks ago, talking about the project. So welcome. Glad you could join us. Okay. Gilbert.
Hi, good morning. How are you? Again, not camera ready as yet.
That's okay. That's fine.
Yeah, I wasn't prepared for that at all. So I run a technology as a service company. Covering the entire Caribbean. So we have an e-commerce platform that allows small businesses to get on board. But the reason I'm here for this session is that I've been tasked by Carib Export to move a number of small businesses throughout the region, from doing brick and mortar sales to doing e-commerce sales. But one of the challenges is financing.
Right.
So this session would allow me to educate myself on crowdfunding that is available to the Caribbean, that I could then pass this information on to a number of the small businesses who are currently utilizing the training sessions that we are providing.
Right. Great. Thank you so much for coming. I thought I saw Gabby come on briefly. Hi, Gabby. Morning. Happy New Year. Could you introduce yourself, please?
Good morning. Happy New Year, all. My name is Gabby Jennifer. I am from Grenada as well. Actually, I'm in the United States right now, but I will be back in Grenada in about 10 days. I am working under the digital agriculture and education sector, and as well looking for some crowdfunding information in that regard.
Great,
Excited.
Thank you. Welcome. Kimani.
Hi, good day. My name is Kimani Philip.
Good morning.
I am from St. Kitts and Nevis. I haven't started an actual business yet, but I'm just trying to gather information because there's an interest in that aspect. So that's my main goal here today. So gather as much information as I can.
Excellent. Thank you so much.
You're welcome.
Collie.
Hi, good morning.
Morning. Happy New Year.
Same to you. Just trying to get you.
Oh, okay. There you go.
Hi.
Okay.
So I'm Collie Thompson. I'm from Trinidad. I don't have a direct business, but I am a part of International Black Chamber of Industry and Commerce, where we have most of our members are entrepreneurs, established entrepreneurs, and also startup entrepreneurs. And I'm responsible for helping them nurture their business and maturing their business to get to a place where their products, goods, and services are internationally ready, regionally ready, and so forth. So any education that I can take hold of to assist them, I'm in. So
great. Thank you so much. Thanks for coming. Kamani.
Hi.
Morning. Happy New Year.
Good morning. Happy New Year to you. Sorry, I just introduced myself.
Oh, you did already. I'm sorry. It's Sam.
Yes, that's fine.
On my screen, the names keep moving around, so it's a little bit hard to keep track. Sam, are you connected?
Yeah, I'm here. Good morning. Happy New Year.
Happy New Year.
Great seeing you back.
Nice to see you.
Yes, great. Of course, not camera ready. I'm Sam Crooner in Curacao, and I'm hoping to have other participants from Curacao on this platform as it's at this meeting.
Great,
stream.
Thanks for joining, Sam. I appreciate it. Greta.
Yes, please let me see if I can let you see my face.
There you go.
Good morning, everyone. I'm not sure if I'm camera ready, but I like persons to see me as, right. I think it is very good. So when you talk about cameras, I had to rush and
that's okay. Don't worry. No pressure.
Okay. Yes, I wear many hats. I am presently in Grenada. I'm a minister of religion with the Methodist Church. But today I am representing an NGO called Mercy Me Empowerment Services Incorporated, which I am the founder and director. It is based in Barbados.
Great.
What it is really is it concentrates on educating persons who are less fortunate, adults, mainly women. And it has a cultural component. So we teach skills that would bring about the culture of the country, right? And we do work in other parts of the Caribbean. So the idea is that as they develop skills, the participants might want to have a cottage industry, might be involved in a cottage industry, which was something unique to Barbados. They might want to have a business, or they might want to work with someone else. Most of them would want to have a business or be involved in a cottage industry. As we speak, the program continues in partnership with one of our churches, and the many of the students there have physical disadvantages, physical inabilities, but they are able to sew, and as we teach them, and they're able to do different things, and they have been selling their produce. So this program will help me to help them how to get funding, etc.
Okay, great. Thank you so much, Greta. Christopher.
Hi, good morning, everybody. I'm Christopher
Morning.
Chinopu, and I'm calling in from Jamaica. I'm actually involved in several businesses. Frankly, I also run a consultancy called 5-Star Quality and Justice Associates, where we facilitate companies seeking to implement international standards in the areas of quality, health and safety, environment, and so on, building sustainability and resilience. But apart from that, I'm also involved in a business venture in relation to converting chicken waste and fish waste to fertilizer, right? It's a blue economy innovation. Currently is one of the blue economy innovations, and it's part of the WIPO project that is going on. So it is related to that. It is in relation to that project that I'm here because we're at a stage now where we are mobilizing funding and investment into the project. That is for converting fish waste to fertilizer. It's already a tried and tested methodology in terms of we have actually implemented it in Belize. And what we are looking towards now is really taking it to scale in both Jamaica and Belize, and basically that's why we're here, to learn more about crowdfunding as a potential source of funding and how to actually mobilize crowdfunding sources.
Great, thank you so much. That's a very interesting project. We'll have to chat about that later.
We shall.
Tara. Well, while we wait on Tara to connect, Yvonne. Okay, let's move along then to Brent. Yvonne, morning.
Just introducing myself. I'm from Dominica. I work remotely throughout the Caribbean and internationally. I work as a sustainable tourism and hospitality management consultant. I'm also involved in I manage a DMC, a small destination management company, a boutique that focuses on Dominica, the nature island of the Caribbean. And I'm also engaged in an NGO that focuses on education for sustainable development with a focus on our indigenous communities. So crowdfunding for me is something that I really don't know too much about, and I'm keen to learn about, and as well as to share with my stakeholders, persons who I work through consultancies, or often as a trainer, persons can't afford my services. So through the NGO, I can actually try to raise funds to help the very people that need the support to be able to make our tourism industry more competitive and sustainable. Thank you so much.
Thank you, Yvonne. Welcome. Brenton?
Hi, good morning.
Morning, Brenton.
I am Brenton Hillier from the island of Dominica, and I am the president of the Dominica Association of Industry and Commerce. And I joined to just gather information and see how we can maybe get our members to benefit from this.
Okay, excellent. Thank you so much. Vincent.
Good morning and Happy New Year to everyone.
Morning.
Nice to meet you again.
Yes.
Winsome.
Nice to meet you again too.
I'm Vincent Boland. I'm a financial consultant, specializing in climate finance, and looking forward to seeing how I could facilitate persons in crowdfunding and getting their projects off the ground.
Excellent. Thank you so much. Let's see. Frizzell.
Good morning and
Good
happy
morning.
New Year to everyone. So my name is Crystal Jerome. I am employed at Grenada Development Bank. So obviously I'm from Grenada. I'm the communication officer, and I thought maybe learning a little bit more about crowdfunding would be able to help me help our customers if it is they're looking for financing along that line.
Great, thank you so much. Welcome, Frizzell. Walker Distribution. Not sure who's behind the name, but if you could introduce yourself.
Hi, good morning to everyone.
Morning.
Right, I'm not camera ready myself, but
that's okay. That's okay. That's okay. Just let us know.
Yes, I'm from Grenada myself. We run a private wholesale distribution company.
Mm-hmm.
We have sort of already advanced ourselves in developing our own model for Grenada in terms of a crowdfunding sort of operation. So we are just in the process right now of partnering with international organizations to try and push our agenda further within the market, which is like diversifying into the education sector as well as the medical assistance sector for persons who cannot afford medical services that is available.
May I have your name, please?
It's Derwin Walker.
I didn't hear you.
It's Derwin Walker, D-E-R-W-I-N, Walker.
Okay, Walker, okay. Welcome, Darwin.
Thank you.
I have Talitha next.
Hi, good morning.
Morning, Talitha.
Okay, I'm Talitha Lothar. I am presently the CEO of the Dominican National Conservation Trust Fund. And I'm here, of course, to learn more about crowdfunding and participate in the discussion. Yeah.
Perfect. Thank you so much. Corey. Okay, let's move ahead then to Kadeen. Rondon.
Hi, good morning.
Morning.
My name is Rondon Carr. I work for a capital venture company in the US, but I'm located in St. Kitts and Nevis. We deal with providing funding for small businesses and startups. What I'm trying to get from this program is some of the businesses that we try to assist, they don't meet the criteria. So it is trying to see what other options we may be able to guide them to, or opportunities that they themselves can go after.
This is an equity fund?
Yes.
Ah, okay. Well, you already know what I'm going to say, I think. Okay. At least on the equity side, you do. Shonette Samuels, next, please.
Hi, good morning.
Morning,
my name
Shonette.
is Shonette Samuel. How are you?
Good.
Happy New Year to everybody.
Happy New Year as well.
Thank you. Well, I'm the owner of a small independent travel agency and a destination marketing company called Sunset Getaway Connection. My profession, I'm a small business consultant. Really and truly, well, as a destination marketing company or management company, our prime focus is St. Lucia. I'm really like most other persons, I'm here to get some information regarding crowdfunding opportunities available in the Caribbean, both for myself and for the small businesses that I work with.
Right. Yeah. Thank you so much and welcome. There are two more folks that I think we have left. One, just briefly, Collie. If Collie is on. And there's one other person. Morning, Collie. How are you?
Hi, good morning.
Morning.
Hi, good morning. I signed in as Miss Collimo, but my name is Roxanne Omalo, and I am the owner of Trinbago Marine Enterprises Limited, and we are the manufacturer and the inventor of the first pumpkin butter in the Caribbean.
Interesting.
So, and we also in the process of getting our approval for the first vegan cheese made with sweet potato. So I am here today. I am here. We are in supermarkets throughout the country, Trinidad and Tobago, and I'm here to find out the best way in which I can get some sort of crowdfunding in which I could expand my business, because we are looking to start to go up the islands to send our products, as well as PriceMart is interested. We have our roadshow coming up on the 23rd. So once we get into PriceMart, that will be bigger volumes. So I am here today to find out who is the best suited persons or in institution to assist my company in going forward to make sure that healthy is the best way of eating, as well as agro processing. So I'm here locked on.
Right. Okay, thanks so
and
much.
Roxanne is one of the best food innovators we have, especially in the vegan area in the Caribbean.
Really?
She didn't mention her vegan veggie links and those type of things also, and puppies.
Yeah.
But I know she's now doing her butter and stuff. But Roxanne,
Miss Leslie. Yeah, just as Chris said, she is remember I introduced the Chamber of Commerce. So she is one of our members. Actually, she's one of our directors actually. So I just shared the link so that she can be a part. So I know this would be of great benefit to her. So she is on our board of directors. So we are all here to learn.
Excellent. Thank you so much. I think I have one more person, actually two, and then we're going to start. Laverne, if you're connected. Well, let's move to Mrs. Samuel then, and then we'll begin the course.
Hi, before
morning.
Call, good morning.
Good morning. Could you tell us just briefly about your company or your affiliation?
Oh, okay. My name is Kay Dean. I am from Grenada. Happy New Year to everybody. Well, I don't really have a company as yet. I stumbled upon this course on Facebook. I am self-employed. I do confectionaries. I am a qualified seamstress as well. So I'm looking to see if there's any way I can expand or try and get my products in supermarkets and see what this could do for me to further myself and better myself as well.
Great. Thank you so much. Well, welcome everyone. I know this took a little bit of time, but I just wanted everyone to get a sense of who your fellow students are, and just to get a sense for me, sort of the variety of companies and organizations that we have represented, and to get a feel for your knowledge about equity and equity crowdfunding more broadly. So let me now share my screen, and then we will begin. Let me know if you're seeing my screen. Are you seeing my screen?
Yeah, yes, we are.
Okay, perfect. Okay, so this course is divided. Let me just go to slideshow, and then we'll start. So this course is divided into 6 components. The first component, the first half of it, deals with equity financing, the kinds of equity financing instruments, including crowdfunding. And then the second half of it takes a more of a deep dive into equity crowdfunding itself, talks about valuation, shares, how do you prepare a campaign for crowdfunding, what happens post-campaign. So today we're going to cover the first half of the course, and next Friday, same time, we will be covering the second half. Rhonda, I know that you're running a capital venture fund, so a lot of what I'm going to say in the first half of the course, you probably already know, so just bear with me. All right, so let's start. So let's talk about the equity crowdfunding concept and process first. What actually is equity investing? It's essentially funding in exchange for stocks. What is the difference between equity and debt? Would anyone care to give me some thoughts?
I guess instead of having to literally, how should I put it, payback with cash value, you do it with stocks.
Anyone else?
I would think equity
is typically borrowing. Equity is basically giving a part of sharing ownership.
Great, thanks. Anyone else?
I'm thinking equity is an asset, while debt would be considered like a liability.
One final response, anyone?
Equity would be what the owners put into the business, and therefore, it's their ownership, and debt is what outside financing comes into the business.
Right. There are elements of what you've all said is correct. One of the things I want to point out, though, is that, and this is one of the major differences, is that debt is a short-term play, aside from the fact you're paying interest and so on versus giving up share ownership in your company. Equity is patient capital, so it's a long-term play, meaning you invest in a company with the expectation that you're going to walk with that company for a number of years, 7, 10 years, right? Until that company grows and hopefully you get your money back with a multiple. What are some of the advantages of equity? One of the reasons why it's called smart capital is because not only do you get the funds, but you also have access to that investor's networks. There is coaching, there's guidance, there's advice that the investors provide to the founder or the investee company. And this particularly happens at the angel investor. I'm hearing something in the background. Someone can mute their mic. Thanks. Yeah, so this kind of hand-holding, coaching, and so on happens particularly at the angel investor level, which is really the sort of first equity play, if you will, that most entrepreneurs undertake. We'll talk a little bit about that later. Secondly, in addition to smart capital and the benefits of that, investors also bring with them best practices in corporate governance. For example, I'm going to say this throughout the course, that investors want to minimize risk. And one of the ways they minimize risk is to make sure that companies they're investing in are structured well and they have a governance strategy. And the government strategy is obviously the board. So one of the things that the investors bring is these guidance and these lessons around corporate governance. what is one of the major disadvantages of equity investment? And we touched on it earlier, which is loss of control. You have to be prepared to give up control, some element of control in the company once you are issuing shares. And we'll get into the different categories of shares later on, but just suffice it to say at this point that depending on the agreement that you conclude with your investor, you might be giving up a significant amount of control in the company, particularly if the investor negotiates a seat on the company board. So that's something to bear in mind when you're thinking about equity. This differs obviously from equity crowdfunding, and we see that later on, but I want to go through now the basics of equity investment so you understand the principles, because there's some elements obviously that carry over into equity crowdfunding. Okay, so I wanted to just touch here on company structure, because this is also important for equity investing. What are the three options for business structure in the Caribbean? Any thoughts? There are three common types of structure. Any ideas? Okay. First is a sole proprietor, sole trader. Second is partnerships. And third is a limited company. And each of these have different implications in terms of taxes, reporting, and control of the business. From a liability standpoint, the sole proprietorship is the most risky. Do you have any idea why? Anyone?
Because
I think
it's on the owner. Go ahead, Roxanne, sorry.
Yeah, you go.
I was
No, go ahead,
thinking
go ahead. Go ahead.
it's risky because it's a sole, so you as the owner stand the majority of responsibility, and if anything should happen, they would be coming after you, the owner.
Okay, Shernette has her hand up. I assume you, yeah.
Yes, as a sole trader, the responsibilities for the company or the business falls on you financially and otherwise. So should the business in any event happen to find itself in debt, you would be liable for all that debt. Possibilities of losing personal property also stands because you basically you equal the company, you are the business, as opposed to a partnership or limited liability company.
Correct. It means that there is with partnerships and limited liability companies, there is a Chinese wall, if you will, between your personal assets and those of the company. So if you're a sole trader and the company gets sued, they can come after your house, your personal assets. So that's absolutely correct. Partnerships also come with their share of issues, because if the partners are not of like mind, there can be issues there. So when you're forming a company, certainly you have to think about, or you ought to be thinking about, these various implications and what makes sense for you from a liability standpoint, from a tax standpoint, and a control of the business standpoint. Okay, so I'm saying, and we all know, that investors prefer the limited liability company, prefer a formal structure. Having said what I just said before, why do you think that investors would want a limited liability company as opposed to a partnership or a sole trader? We just mentioned
it. Because in terms of sharing ownership, they can put themselves on the board and they appreciate the structure of the limited liabilities.
Right. Yes, it comes back to the Chinese wall between personal assets and assets of the business, right? Because technically speaking, they don't want to be entangled with any liabilities of the company itself. They wouldn't want their personal assets to be entangled. This is why in due diligence, which we'll talk about later, one of the issues that investors want answers to is whether the company they're looking at to invest has any legal entanglements that they ought to know about, right? So I'm saying the regulations around a limited company de-risk that company, if you will, in the eyes of investors. So here I talk about regulation, I talk about limited liability vis-a-vis the company's debts. So those are really the two main overriding issues, because again, remember that investors, what's driving them is that they want to de-risk their investments. And to some extent, in fact, the same holds in an equity crowdfunding scenario, even though you're talking about an online transaction, when investors are looking to invest in companies in a crowdfunding situation, they're also thinking about whether those companies are de-risked based on their structure, based on their corporate governance, et cetera, et cetera. I just wanted to touch on two shares now briefly. There are two types of shares that are issued by a company. There are differences in terms of risks and benefits. Anyone, do you have an idea of what those two types of shares are? Think about if you're investing in the stock market and the kinds of shares you would get. Does anyone have any idea what those two types of shares are?
Voting and non-voting?
Yes, but what are those shares called?
Class A and Class B?
Preference and common shares.
Thank you, Vincent. Right, what's the difference between common shares and preference shares?
So preference shareholders are entitled to a fixed rate of return, and sometimes may not necessarily have voting rights. Common shares, they have to take the balance of whatever profit remains, the profits or losses.
Okay, all right, okay, okay. There are two things involved in that. One is, yes, ordinary shareholders have voting power. For example, if you buy shares in a company, you will be issued ordinary shares, and you have a right to attend meetings, shareholder meetings, and so on, where the management discuss issues pertaining to the company policies that they want to institute, etc. And you have a right to vote on that. Preference shares may or may not have voting rights. Most oftentimes they don't. But what they do have is that, as Vincent said, they have the right to be paid out first in the event of a liquidation. And a liquidation could be considered the company going public, or the company being sold to another entity, etc. So the preference shares get paid first before the ordinary shareholders, right? I say here that investors expect to receive preferred stock because of the advantage. This payout advantage is known as the liquidation preference. Now, there are two kinds of, but it gets a little more complicated now, because in terms of the preference shares or preference or preferred stock, same thing, there are two kinds of those kinds of stocks. One is participating preferred stock. The other one is non-participating preferred stock. And the difference is that if you have participating preferred stock, you can double dip, meaning if the company is sold, you get your payout, but you also have the right to convert your shares, whatever percentage share holding you have, you can convert those to ordinary shares and participate again in the second payout. So as you can imagine, a founder would not want to negotiate with an investor participating shares, because it's a double dipping before he or she as owner or the other ordinary shareholders get their payment. Non-participating preferred stock is more limited, and this is an option that investors like to offer. Investee companies like to offer to investors. because it says you can only participate in a payout once. You can't double dip. Is that clear for everyone? Okay. All right, so having just sort of touched on certain elements of the equity investment scenario, let's now talk about the equity investment process itself. Here you can see on the screen, there are several steps here. One is screening, where investors look at potential investee companies and based on the process, will make a decision. There's a pitch where the investee company presents a case to the investor, why invest in that company. If they move past that stage, then you go into due diligence, where investor takes a deeper dive into the company and so on. If that stage is successful, then we move to negotiating the actual agreement. And then the agreement is drafted, and then we close the deal. So we're going to go through each of these steps in detail, but just to say there are two key documents that guide the process. The first is a pitch deck, and many of you, of course, are familiar with that.
Can I ask a question?
Ahead. Absolutely.
So the question is this applicable for both startups as
You're faded out a little bit. I didn't hear the last part.
well as existing companies?
Could you say that again? You're breaking up.
Sorry. Sure. Is this applicable for startups as well as existing companies?
Yes, but listen, let's make a caveat. Generally speaking, investors tend not to look at startups except if they are, say, tech companies where there's a clear path to scale, and there's an innovation, and the investors are fairly comfortable that they're going to get their money back, right? So early stage companies are really where certainly angel investors will begin to look, because, again, come back to the whole notion of de-risking a firm. Investors want to know that at minimum, you have a prototype that's been tested and validated in the market, and that ideally you have contracts for sale already. You have, first movers in terms of customers already. Generally speaking, except if you're a tech firm, you don't, a startup would not have that, right? Here in this country, in the US, where I'm based, angel investors tend to be more aggressive, I would say, than say in a Caribbean context, where they're willing to take bets on new companies that might have just released their prototype. Because of the nature of the product, there's expectation that this is going to scale rapidly. It fills a need in the market, and it checks the boxes in terms of the investor's own due diligence checklist. But yes, this is a process that would apply to all companies at all stages of the game. We're going to talk about in a little bit equity funds and how those are structured, and how that differs from just an ordinary one-on-one equity investment play in additional company. Hope that answers your question. Hello?
Yes, thank you.
Yes, okay, right. So as I said, there are two documents: a pitch deck, which basically tells the story of the company and builds a case vis-a-vis the investor to close a deal, or at least piques the interest for them to want to go further and then ultimately close the deal. And then there's a term sheet, which is not a binding document, but it's the mechanism around which many of the issues and differences between the investor and the investee company, which we'll see later on, come into play. So the term sheet is exactly what it sounds. It spells out the terms of the investment. And of course, this is done with legal assistance. It's not something that you could do on your own. Okay, so let's talk about the screening stage first. Here it is, again, depending on the market, the country, etc. Investors and investee companies can meet in various ways. I say here that connections is key, networking is key. In some instances, for example, in Jamaica with First Angels, the Angel Investor Network in Jamaica, there's an application form. So if you are interested in an investment from the Angel Network or the investors in the Angel Network, you would apply and there'd be screening done at the application stage. There are certain criteria. If you meet those criteria, then you are invited to pitch before investors. It's important to note that this, like a lot of things in life, can be a challenge because the reality is that only a very small proportion of the companies that actually are presented to investors actually get an investment. I mean, it's just the way things are. I mean, investors would look at, depending on the market, 200, 300 potential deals a year and only choose, 10, 20 of those. So it's important to note that it's, you have to really sort of put your best foot forward, have your elevator pitch ready. So if you happen to meet an investor, you can at least give them a sense of what the company is in such a way that it would pique their interest to want to go further, right? It's also good to have in your back pocket an executive summary, a synopsis of the pitch as well, because sometimes you're asked to sort of send in a short document to show what the company is all about, what is your product that you're selling, and sort of the dynamics of that process. In terms of crowdfunding, it's an online process and you still have to sell your company and you still have to do a pitch. So this process here is similar to equity crowdfunding in that respect, because you're still selling your company in the context of a pitch to investors. The only difference with crowdfunding, with equity crowdfunding, is that you're being exposed to a larger group of potential investors than you would, say, in a conventional equity investment process. So if you've applied or if you've met an investor and they're interested, you'll be asked to pitch. The pitch is really the make or break stage here, because you really have to sell the company, pique the interest of the investor to wanna go further. You've got to basically give a clear picture of the business and why. And I'm dwelling on this here because this is it's the same pitch deck you would present to an investor when you're pitching face to face. It's the same kind of document you're going to have to prepare as part of your campaign for equity crowdfunding, right? So again, you have to provide an incentive for the investor to want to go further, and there are certain key elements that need to be in that pitch deck, and here they are. You have to talk about your mission, vision, your motivation, your why, as we like to say. What is the problem you're trying to solve? What's the pain point? And what is the solution that you're proposing? What is the business model? What value? What's a product? What value are providing for the consumer in providing that product or service? What is the demand for that product? Have you tested to figure out what is the demand, and of that potential market, what can you actually service, right? So you'll see terms when you're looking at developing pitch decks around total addressable market, meaning what can be addressed in the aggregate, and then you'll see terms like total serviceable market, meaning what can you with your product or service actually service, what customer base of that larger group of customers. The issue of traction is very important. Have you actually tested your product or service? Do you already have customers? Do you have, if not actual customers, do you have commitments that are signed by these potential customers to buy your product or service. The next element, why now, is critical. Why, why at this particular juncture is this product or service key? And secondly, why should the investors invest in you at this particular stage of the business? Then the management team, this is very important. Again, this speaks to the whole notion of de-risking the business, because investors are going to want to know that the team that's in place is not only qualified in their respective areas. You need to have a marketing person, somebody who sell, who is the face of the business, and somebody, the techie person, who basically designs a product or service, right? And make sure that it addresses the needs of the customers. So it's not only having the right team in terms of qualifications, but also the team has to work seamlessly together. They have to be of like mind. So in the due diligence process, the investors are going to be looking at the composition of the team, getting references and so on, talking to folks to get a feel and a comfort level around the management team that's in place. Then this is also very important, competition. Who is your competition? Some firms starting out, particularly if it's a new product, something that's been not on the market before, something that's a tech solution, for example, they will say, well, wait, there's no competition, but you always have competition. Even if, say, you're designing a widget, the folks who are doing that same process manually would be your competition. So this is an area that you have to really pay close attention to really spell out in a fair amount of detail. You have to do a competitive analysis and show that clearly in your pitch deck. And then what are you requesting in terms of funding? How much money do you need? And how much equity are you willing to give up in the company for that amount of money, right? It's always advisable to ask for a little bit more than you actually need to give yourself some runway to actually implement, because things are always going to happen along the way. So you always have to give yourself a little wiggle room in terms of that. Also, pay particular attention to the percentage of equity you're trying to give up, because most newbies to the equity investment game tend to give up too much too early, in the sense that you have to think, if I'm going to give up, say, 30% of my company now, what if I need to go back for a second round, say in 2 or 3 years, and I give up another 30% of my company? It means that I'm now a minority shareholder. So these are things to consider about not only the amount of money that you're asking for, but also the percentage ownership that you're going to give up going out the gate. And then, of course, investors are going to want to know what is the time frame, within what time frame will you actually be able to see positive cash flow? That's very important. Okay, so if you have a successful pitch, then the investors will say, okay, let's move to the due diligence phase. And here, the key question the investor wants to answer is, why should I invest in this company, and why should I invest in this company now? Again, this could, depending on the market you're in, this could be a long process. In the Caribbean case, and here I'm using Jamaica because Jamaica has the most active venture capital scene at the moment, it could be 6 months or more, depending on the information available and so on. The idea behind due diligence is to really identify risks, provide a rationale for investment, and most importantly, I think, is to figure out whether there's a fit between the founder and the investor. Because as I like to say, this is like a marriage, in the sense that, it's a long-term relationship. It's not a one-off with your banker where you sign for a loan, you repay with interest, and you may or may not talk to that banker on an ongoing basis, right? This is a close relationship where the investor is being informed of developments in the company, and in most instances giving their 2 cents in terms of what should happen based on their ownership. So you have to make sure, and this is a more of a sort of qualitative play, you have to make sure that you feel comfortable with that investor, and they have to make sure they're comfortable with you, and that this could be a working relationship going forward that really is beneficial to both parties. So here are the key elements for the due diligence. There's usually a checklist that investors use, and these are sort of the basic elements, and these are issues and questions that have to be answered and documents that have to be provided. So the organizational documents, obviously, the incorporation certification and this kind of thing, the management and organizational structure, your organizational chart, your team, the CVs of the team, etc., references of the various for the various management, and also the board, if a board exists. Here, if you've had previous investments, they would want to see what are the rights of those shareholders. Are they ordinary shareholders, preferential shareholders? Have you had a previous investment? If so, what are the terms? The capitalization table, which spells out, it's a picture of all the shareholdings of the various players, the founders, other shareholders, employees. Companies usually establish an option, what's called an option pool, which puts aside a pot of shares, ordinary shares for employees. You've heard of the term stock options. This is where it comes in. They'll also want to know about intellectual property. Is there proprietary software, designs, etc., that relate to this product or the company? And if so, are these protected legally? We mentioned earlier about debt. Are there any liabilities that the company has?
Excuse me.
Yes.
Will we have the deck available after the session?
We're going to post. We're going to after the training sessions, meaning all the groups have been trained. We're going to post this information, or a summary really of this information on the ECSRC's website. So you'll have it as a reference.
Thank you. Thank you.
Okay. I know I'm going a little bit fast, and for those of you who have never been exposed to equity before, it might be a little new. So we are going to put information on it for you. And certainly if you've got questions, you can also post those questions online as well. And I'll be able to direct you either to sources, or I can answer them myself. Okay. All right. So just going on. So contracts and any legal issues that the company is committed to, any supply contracts, etc. They want to see those. And of course, the financials, financial statements, cash flow, balance sheet, etc., etc. They'd want to see that. Over, if the company is fairly new, then there would be, those records would be fairly thin, but nevertheless, they'd want to see those. And certainly as part of your pitch deck, you would have put together projections for revenues based on your product or service that you're pitching to them. So they want to see how this squares with your financials to date. And then, of course, the product or service rollout, the roadmap, the milestones you're going to meet along the path to profitability and so forth. Any other questions so far? Okay. All right, so you've successfully moved past due diligence. The investors are happy. And now we're moving to the negotiation phase. And here we talked about earlier, the term sheet, right? This is really sort of the roadmap, if you will, for the investment deal. The investor is the one who develops the term sheet and presents it to you as investee company, outlining what they're going to offer. You know, for the money you're asking, this is what they want. This is the percentage you're asking for. They might also tell you that what you're valuing your company for is not what they would agree to, because the share ownership that you're going to give up for the funding you're asking for is based on a valuation of the company. And we're going to talk about valuation as well. But this is also a point of difference between the investor and the investee company. The issue of what's the company worth? Because obviously, if the investor wants a high return, they will tend to lowball your valuation because it gives them a higher return at the back end. And conversely, the investee company wants to give up as little equity as possible, so they're gonna want a high valuation, and they'll present a high valuation, right? But the term sheet is really where the heart and soul of the deal takes place, the negotiation, because there's back and forth between the investor and the investee company around things like valuation, percentage share ownership, shareholder rights, etc. Sorry, I'm going backwards, not right. So one thing to note is that investor and founders normally have different and opposing interests, and I just mentioned several there. This is a tricky, or it can be a tricky process, and the way to mitigate some of the challenges around that negotiation is to really be frank and open. Both parties have to be frank and open, because a trust is very important here. In many instances, certainly at the angel investor stage, some investors will be inclined, particularly if they know that the investee company is new to the investment process, they might also be willing to give some guidance in terms of issues that need to be considered. But of course, they're not going to give up their rights because they have a certain agenda. But just to say that this can be a very important learning process for the investee company. All right, so what are some of the priorities here for the investor and the founder? Company ownership. Here, the founder, obviously, this is a key point of contention, because they will not want to in transferring shares or a percentage ownership to that investor. They will not want to give up control of the company. So from where they sit, they'll want to minimize that. They would not want, for example, to have that investor have a seat on the board if at all possible. But again, on the investor side, they'd want to have a seat on the board, or at least observer status on the board, to be able to weigh in on certain decisions, right? The investor wants to maximize return under all exit circumstances, whether it is a sale of the company, whether the company is going public or not. And then another issue is the issue of dilution. Does anyone know what dilution is before I explain? Oops, I'm sorry. I just switched my slide. Oops. Anyone? Okay. Let's look at a scenario. Say company A, or say Christopher, I'll use it as an example. Gabby, do you have a question?
No.
Okay, I saw you highlighted, so I thought you were going to ask a question. Okay, so let's say Christopher's company, which is a blue economy project, successfully gets its first investment from an angel investor or a group of angel investors. And they've negotiated, let's say $200,000 for 20% of the company. The company grows over 3 years or so. And then Christopher decides, I need a second investment. So he goes to, let's say a group of venture capital investors now, because the company is of sufficient size to attract them. He's negotiating now, say $500,000 for another, let's say 20% of the company. Those first angel investors are going to be very concerned that their ownership in that second investment will be diluted, right? Because now the value of their shares will be lessened because they're now bringing in new investors with another 20% ownership. So what investors usually do, particularly any investment, they would want to see anti-dilution terms inserted in the term sheet, which says, if you have a second investment or the value of our stock is protected, right? So what they do usually is convert their stocks to the new price so that the value remains, the percentage ownership and the value remains. I know that I don't want to go into it too much now because I want to really go through the rest of the slides, but basically it means that you're protecting, the investors are protecting their percentage ownership in the company by inserting language in the final agreement that speaks to that protection. Okay. So the term sheet has several pieces to it. One is the deal economics, which is, the company's getting X amount of money from these investors at X percent, for X percentage ownership. These are the price of the shares. These are the number of shares that they're getting that represents a percentage ownership. Management control speaks to, are the shareholders, those investors, going to have a seat on the board or not? Are they going to have any say in management decisions or not? This is a major difference with equity crowdfunding because it's an online play. The investors are basically being informed. I know I'm jumping ahead a little bit, but I just wanted to show you a difference. They're basically informed about what's happening in the company. They don't have voting rights. Investor rights and protections speak to things like dilution. What happens if there's another round of investment? What happens to those, the shares, the value of the shares of those first-time investors? What happens if company issues new shares? Do the existing shareholders have a right to participate in buying those shares or not? Those kinds of things. And then here, the exits. What happens to the investment by these investors on exit once there's a sale or a public initial public offering on the stock market, etc. And there's the cap table, as I mentioned before, is a roadmap spelling out the ownership, who owns what in the company in terms of shares and how much. The waterfall analysis is the other side of the cap table, which talks about who gets what in a sale. So the waterfall analysis would be a speculative document, basically saying, well, if we sell this company for X, this is what the founders get. This is what the employees get. This is what the investors get. And it's spelled out over maybe two or three possible scenarios showing actually dollars and cents what each of those players will get. Once we've agreed on the term sheet, all parties are happy, then we move to the agreement itself. And the agreement can include a number of things. The stock purchase agreement, which is basically what it says. What are you buying? How much stock at what price? The voting agreement that spells out voting rights, if there are voting rights for the investors. the management rights letter that talks, it's a letter that spells out what management is committing to do. Investor rights letter that says what exactly what it says, what rights the investors have in this particular deal. And then the legal opinion from the company's lawyer that speaks to whether there are going to be any amendments to the existing company structure, the bylaws, etc., to accommodate this investment. And of course, the formal closing where everyone signs on the dotted line. There are certain things that have to be done, the completion of due diligence, the finalizing of the stock purchase agreement, and the qualification of preferred stock. Remember, I said that this, meaning the stock has to be registered. And remember, I said that investors get preferred stock. On occasion, they do get ordinary shares as well, or ordinary stock. But more often than not, they're getting preferred stock because of that advantage in terms of payout. And then the funds are held in escrow until these documents are signed. Any questions so far? Okay, so let's move on quickly to the different kinds of instruments in equity financing. First, I'm going to talk very briefly about angel investing. Here again, this is an individual investor or an investor in the context of a network, as opposed to an equity investment fund, which I'll come to next. This is usually a high net worth individual using their personal funds to invest in seed or early stage companies with high potential. So they have to check certain boxes, as I mentioned to Vincent earlier: potential for scaling, high returns, innovation, etc. They're bringing smart capital, which means they bring know-how, coaching, mentoring, access to networks, etc., along with the funds. Angel investors usually have very high tolerance for risk. They usually expect that perhaps half of their investment portfolio might not pan out, but then they expect to have at least 1 or 2 stars that would compensate. Say if they have a portfolio of 10 companies, maybe 4 flop, 3 do so-so, and the rest give real return, so that at the end of the day, they have a reasonable return for the entire portfolio. They also can be a serial investor, which means they keep investing over a period of time to build up a sizable portfolio. And then, of course, they can be part of a network. Unfortunately, in the Caribbean, there's really only one vibrant network now in the region. There are individual angel investors, of course, but only one functioning angel investor network based in Jamaica, First Angels, which is now going regional. They actually have several investors that they've brought in from different countries in the Caribbean. It is my view that certainly on the spectrum of equity investing, for small companies in particular, angel investment is particularly suited because the size of investment is much smaller, and the level of hand-holding and advice is generally much higher than with VC or private equity, which are bigger and larger and more sizable investment deals. Here I'm just summarizing sort of the characteristics: the size of investment, usually small individuals, seed and early stage, high risk, and and so forth. Let me shift now quickly to, well, actually, before I do that, let me talk about convertible notes a little bit. There's a reason this is important. Many times, investors, rather than taking equity at the outset, the founder will negotiate a convertible note, meaning a loan that converts later to equity at a certain trigger point. The idea behind negotiating convertible notes is that it gives the company time to grow and gives them a little bit of a breathing room without having to give up equity at the beginning. this is important. Again, I'm seeing it increasingly being used with angel investing in the Caribbean right now. And certainly, this is used also with equity crowdfunding. I just wanted to show you, to explain basically how it works. And these are sort of standard terms. This is an example just showing how it works. And I've highlighted certain areas here just to kind of discuss. So say the amount of the loan, the amount invested is $250,000, right? Usually the interest rate falls between 5 and 15%. There's a conversion date. The conversion date is usually when the company decides to now go to a second set of investors to raise equity. So at that point, the loan converts, the loan that the first investors gave would convert to equity, right? Just to say that the loan accrues interest over that period. So say you're holding, in this case, the length of time of the loan before conversion is 306 days. So it's accruing interest on that basis, right? On a simple interest basis, excuse me. So now the equity round, the price of the shares of the equity round, the second equity round for those new investors coming in, the price per share is $3.60. In order to not make the first investors be at a disadvantage, convertible notes, the arrangement usually give those first investors a discount on the price of the shares. In other words, to preserve, if there were no investment, no second investment, those that would convert, those first investors would be converted with a certain percentage ownership in the company. So in order to preserve that, then those first investors are given a discount on the price, right? Usually it's a 20% discount on average, right? So the conversion price is, rather than paying $3.60 per share, they're paying $2.88 per share. Okay, I'm just going to leave it there because again, we'll come back to this later, but just to say that a viable option, both for equity crowdfunding and regular angel investment, is a convertible note. And it's particularly attractive for smaller companies that are just entering the market with, few customers and who want some breathing room to kind of build up their customer base and their revenues. Okay, let me switch now to venture capital and private equity investing. These usually, while there might be individual venture capital investors and even private equity, although that's unusual, most times these kinds of investments take place in the context of a fund. And Randon, as he mentioned earlier, runs one such fund that's based in the US, but I think the branch, if I recall, Randon, you said it was in St. Kitts. So basically, a fund manager will create a fund to invest in, sometimes early stage, but usually more often than not, it's growth stage firms. Through investment fund vehicles established by the company. So these investment funds can either be general, where you're looking at a particular stage of firm, but you're agnostic or you're indifferent to the industries that those companies are in. It could be an impact investing fund, where you're looking at companies that are having a positive impact, either socially, environmentally, et cetera, on their respective communities. Or it could be an industry-specific fund where you're looking at tourism or agribusiness or manufacturing or technology, et cetera. Some large venture capital companies run several funds, and they could be of all those types I've mentioned, right? Generally speaking, a company has to have at least one angel round before venture capitalists or private equity investors will look at you. So it's sort of a cascading framework, if you will. So you start off with funding as a startup company or seed stage, funding from friends and family. You could get a loan from grants from organizations to help you to develop your prototype. You might then be able to move to an angel investor or an angel investment network for that first equity round. Once you're successful, the company grows a little bit, then you'll be attracted to a venture capitalist. And then if the company continues to grow, you could, depending on the field and the industry, you could be attractive to private equity. So venture capital and private equity, the size of investment, again, smallest in case of angel investment, larger in venture capital, and largest multi-million-dollar deals, energy, infrastructure, etc., on the private equity side. In terms of sources of funds, venture capitalists usually, in the context of their funds, raise money from institutions, pension funds, private foundations, family offices, or rich individuals, multilateral donors such as the World Bank, Inter-American Development Bank, etc. Someone has a question? Mm-hmm.
Yes, quick question.
Yes.
I'm not sure if it is a scope of this training presentation or if it will somehow be addressed at some point. But if you can spare some minutes on to elaborate on when it comes to the previous slide, when it comes down to people getting funds from family, friends, and so forth, that what is usually the problem is that loans, family loans, etc., are taken without any proper documentation and legal aspects of it, where people end up losing their companies in a very simple way, because they thought the cousin was just borrowing them money or giving them, those kind of aspects. If you can address those, the importance of that, because all of that will be come into problems if you're getting into equity, where you show that you're not the right owner of the company.
Well, part of, I'm glad you raised that, Sam, because part of the issue, I guess the elephant in the room here, is that companies need to be, you can't just jump into equity, whether it's crowdfunding or regular angel investing, for example, can't just jump in unprepared, right? Because one, you won't be attractive to an investor, but two, even if they take a look, ultimately you're not going to get the funding because, like you said, there's no, remember we talked about looking in due diligence whether the company has debt, right? If those debtors are not, there are no agreements spelling out the terms of those loans, et cetera, this is a disincentive, this is a risk as far as the investor is concerned to his or her money, right? So even if you're doing crowdfunding and and the investors are faceless, you're not seeing them face to face, you're going to present a campaign and you're going to have to present this kind of information in your documentation. And so if on a crowdfunding platform, you have your company and therefore others, and your debt agreements are not clear with family and friends, then it's a disincentive for any investor on that platform to want to invest in your company. So one of the things that needs to happen is that companies need to be prepared for investment, prepared for access to any kind of financing, actually, because many of the things that you require to get a bank loan in terms of segmenting your personal finances from your business having proper records, all of those things are also required for equity investing. So I'm happy that you raised that point, Sam. Thanks so much for that. Right. So just going back to venture capital. So in terms of type of funding, venture capital funding is usually first round is Series A, Series B, Series C is private equity. And then the risk tolerance, again, this is generalities. It depends on the market you're in as well. But again, venture capitalists tend to have a high tolerance for risk, but of course, against a backdrop of making sure that all the I's are dotted and the T's are crossed. And then on the PE side, again, these are very large deals. I'm thinking here, for those of you who are familiar, say a Portland Equity, who has focused on the higher end of the market. They're not sort of playing in the angel investor or even VC early stage segment at all. They're looking at companies that have been around for a while, that have a track record, and they're interested in doing big deals. Even though I saw recently where Portland has just launched a social impact fund, not quite sure what the terms and the criteria are going to be yet, but I venture to say that given their orientation to date, these are still going to be with fairly established companies, or certainly companies that have a clear path to revenue growth and strong returns for them. Okay, so I just wanted to sort of show you in this slide the structure of the typical venture capital and PE fund. So you have the fund, the individual who is launching the fund, and they are known as a general partner, but the firm itself that they've created is also known as a general partner. They will present their case, they will shop their idea, their fund around to the pension funds, the multilaterals and so on. Those investors are limited investors. They're known as limited investors, right? And the fund is really based on a limited partnership. So when I was in my former life before I started this company, I was a senior manager at the Inter-American Development Bank, more specifically IDB Lab, which is a innovation facility in the IDB group. And part of what we did, we participated in, gave funding really to equity funds in Latin American Caribbean. And I was managing and supervising the first ever equity fund in Haiti after the earthquake. And so it was the IDB, it was FMO, which is a Dutch aid agency, and the World Bank IFC as limited partners in this fund. And while we didn't, the limited partners are basically what it says. You have a right to information on the firm. You can even, on the fund rather, you can even weigh in on and give your perspective on the individual investments, but you don't have any control ultimately over the investee companies and the selection of those investing companies. So you're basically putting your faith in the general partner and the management of that VC firm and that VC fund to actually make smart decisions in terms of the investee companies. So here you have the general partner, the limited partners who put the money in and who designate or delegate their control to the general partner themselves. And then you have the investee companies. And usually, we'll talk about this subsequently, but usually there's a fundraising period where, say, 2 to 3 years, the fund manager is marketing that fund, getting investment in based on targets. Usually the typical small fund targets a $20 million raise initially. There's usually sometimes a second raise. Say they might say, I want to raise a $50 million fund in 2 stages. So you raise the first 20 million, in which time you set up the fund, you bring in staff, and you begin to vet companies and invest. And then there might be a second period of fundraising midway through the investment period, where you raise an additional, $30 million. So you have the fundraising period, you have the investment period that could also include some fundraising, a second raise. The investment period is usually 5 years or so, 3 to 5 years, depending on the fund. And then you have a monitoring period where the investments, no more investments, you close that portfolio and you monitor those investments, make sure, and this is where, again, guidance is important. Usually these funds hire an operations person who works directly with those companies to make sure that they're performing, giving them advice, et cetera, et cetera. And then you, based on the terms of that fund, you will begin in the exit and close period to exit those investments. Any questions so far? Okay, so now we're going to come to equity crowdfunding and talk about that. Okay, again, like traditional equity, it's funding provided to the public in this time, though, not just an investor, but investors anywhere in exchange for equity and a percentage ownership in your company. Just to give you a sense, this is really a growing global trend. $1.4 billion in crowdfunding in 2017, a projected $5 billion with a B by the end of 2022. So it's a large amount of money being moved around. And in this area, it's particularly the US, it's been really skyrocketing because of legislation passed under the Obama era, which allowed ordinary investors, a man on the street, to invest in small companies under the Jobs Act to stimulate. The idea was to stimulate the growth of small business throughout the US. So this is really, and then it was amended subsequently to allow, all kinds of investors, accredited and non-accredited, to invest in these small companies. In the Caribbean, again, this is a fairly new concept. There have been some attempts to create crowdfunding funds, but even before that, there's a nice study that you might want to look at, focused in the Caribbean. It's a World Bank study called "The Potential for Crowdfunding in the Caribbean." Came out in 2017, looking at what are the ingredients that are needed for crowdfunding, and are they present in the Caribbean? And if not, how can we stimulate a crowdfunding ecosystem in the Caribbean? And that report found that in 2015 already, there were firms in Jamaica that were actually going on international platforms to raise funds. So this is just giving you a breakdown of the percentage of companies going to each of these various crowdfunding platforms. Here in Jamaica, I'm just giving you a sense of, crowdfunding efforts that have been launched over the last couple of years. I Support Jamaica was launched by Jamaica Nationals in 2013. It was focused, I'm sorry, I tried to admit someone just now and I think I missed my slide, sorry about that. Yeah, it was, I Support was basically focused on the diaspora. The idea was that to channel resources from the diaspora to support NGOs primarily in Jamaica and to support Jamaica's development more broadly. I think it was not successful. By and large, it's fizzled. In fact, I don't think it exists now because there was not sufficient mobilization of the diaspora, I think, even before launching this effort. Subsequent to that, the Jamaica Stock Exchange has, which has been very innovative, particularly in the last couple of years, launched a social exchange in 2018. And that social exchange is interesting because the first part of it, the first piece of the exchange focuses on donations, raising funds for NGOs in education, in health, etc., in Jamaica, from both local Jamaicans and Jamaicans overseas. But the second piece of it is going to be an equity crowdfunding play, particularly around impact investing. They are now finalizing the legislation to allow that to happen. But the idea, again, is to attract financing, but equity this time, and ideally trying to move some of those entities that would have asked for donations, and some of these can be small companies as well, into the second half, if you will, of the exchange, looking at actually rather than donations, but attracting equity. And then these two, Real Helping Hand and Amber Fund Me, sprung up in COVID. Basically, they're raising money for emergencies, health, education emergencies, etc. There are small aspects of both of these two that focus on small business funding as well. And then most recently in Bahamas, I think we have the only equity crowdfunding platform in the Caribbean now that's active, Arawak X. They've actually been relatively successful considering they just started. They have, I think, 4 or 5 companies have successfully raised funds on the platform already. They're vetting companies as we speak. They're admitting, or their goal rather is to admit 2 or 3 companies per month onto the platform. And most importantly, they're helping to, through the lessons learned as they go through this process, they're helping to refine the rules around crowdfunding in the Bahamas through the Bahamas FSC. Okay, just to remind you of the crowdfunding process, funds are pledged on the platform. The businesses, of course, launch campaigns, and we'll talk about a bit about what that involves. Launch campaigns. These companies are screened by the public, by investors, both local and overseas, and funds are pledged. Funds are transferred. Once the crowdfunding campaign closes for a company, funds are transferred to, assuming that the goals are met, the funds are transferred to the businesses. Because I need to point out the fact that, except in very few cases, if you target as a company, you're targeting to raise 100,000 via crowdfunding and you don't raise 100,000, then you get none of that money. And the rationale for that is that if you have asked for 100,000 and you're going to be doing certain activities, if you fall short of that amount, then you can't meet your commitment to actually execute those activities, right? So in exchange for the funds, the companies now issue stocks or shares back to the public. Any questions about that? Okay. All right, so I want to talk a bit now about the differences between equity crowdfunding versus traditional equity financing. But I think we ought to take a break for about 5 minutes or so. It's now, I guess, what, 11:45 your time? So let's come back at 10 of, just to give you a chance to stretch your legs, get some water, and then we come and talk about the differences. Okay? Thank you. Okay. Are we back? Okay, so let's continue.
Yes.
Okay, perfect. All right, so let's talk about the differences between equity crowdfunding and traditional equity financing. Okay, first, in terms of ownership, there are no board seats or voting power from investors. I mentioned that earlier in the presentation. Secondly, in terms of marketing, bear in mind that equity crowdfunding is all an online play. It's on a platform. So the marketing on the part of the company who wants the investment is very key. It's a different strategy. It's more focused on social media versus face-to-face networking, but it's a process that has to take place before you actually launch a campaign, during your campaign, and to some extent even after the campaign. Valuation. We talked about the fact that the share ownership is based on the value of your company. The big difference with equity crowdfunding is that unlike traditional crowdfunding, where the owner and the investor are haggling back and forth about the value of the company, in this case, it's on the company's terms. You decide as owner, you decide on the valuation of the company, and on that basis, you decide on the percentage share ownership you're going to give up to your online investors. Another key difference, flexibility. Here again, as we saw earlier, the traditional route is pretty complicated. It's extensive, whereas here you have a simpler process involved to receive the funds and to issue shares. So all things being equal, it could be a shorter process to undertake crowdfunding than it would, say, a conventional equity financing deal. Then, of course, I want to mention this too, the investor mindset. In many instances, particularly if you have a social business, one with impact, social, environmental, health impact, let's say, you might be more attractive to a equity crowdfunder than you would a conventional investor, because many times folks who go online to invest have a social mission. They want to help companies. They have a genuine desire to help by, providing some financing. Okay, so what are the advantages from the point of view of the business owner? It's a faster way to raise investment capital. You don't have to go through, extensive screenings, et cetera, et cetera. You design your campaign, you mount it online. Of course, you have to do some work to make sure people are looking at your campaign. But bottom line, it's a faster, or it can be a faster process. Again, coming back to Sam's point, assuming that you're ready, you have your ducks lined up in terms of your books, your financials, et cetera, et cetera. If you don't, then it means there's an extra step to get yourself ready. Secondly, exposure to a larger number of investors. Again, if you're going to an angel investor or even a network, you're exposing yourself to a few investors. If you're on a platform, you're, technically speaking, anyone, anywhere could invest. Visibility, again, because you're using social media, because it's an online platform, your visibility for your company is increased perhaps tenfold, as opposed to if you're dealing a more private transaction with an individual investor. And then, of course, in some instances, you can create a loyal following for your product or service through crowdfunding, right? So that's important because, again, the visibility, you can actually even leverage your existing customers to create an even larger following. Someone's very close to their mic, so I'm getting a lot of interference. Thank you. What are the risks? Like most things in life, right? There are risks. Okay, you have to build momentum to be successful raising funds in crowdfunding. It's not a simple situation that you design your campaign, you post it on the platform, and you sit back. You have to do a lot of awareness raising and so on, particularly among your existing customers, because to get traction online for a crowdfunding investment, it's best to have some early takers. And the way to get early takers is to even before you launch a campaign, to have folks excited about it and willing to participate. It's sort of like creating demand for a product without actually building it yet. Same kind of principle. Secondly, depending again, how ready you are, this could be a significant investment of time and effort. So that's something to bear in mind, and it's a risk. I mentioned the third risk earlier, which says your funds are not transferred to you if you don't raise the money that you targeted. So that is also a risk. So there are ways to mitigate those risks, but this is something to bear in mind. And then it could be expensive if you need to hire expertise to help you to design your campaign, social media person, a lawyer, et cetera, an accountant to get your books together. It could be expensive. And then the platforms are not free, they charge a fee. And so it's always good to shop around if you have the opportunity to do so, and if they're more than one platform, to see, what the rates are and what they're offering in return for those rates. And we'll come back to this later. All right, now I'm going to talk about the crowdfunding ecosystem. I mentioned the World Bank report before. They sort of focused on 3 key elements that are necessary to really develop a vibrant crowdfunding ecosystem. The first is user capability, meaning are there takers, and the folks who exist are they able to successfully mount campaigns on the platform? Are they capable of doing that? Secondly, so in other words, is there supply of small firms ready, willing, and able to engage in equity crowdfunding? Secondly, technology. Is there a technology framework that's there? Are the platforms available? And if so, are they robust enough to support crowdfunding? And then is the regulation in place, the policy framework in place to actually make this happen? Just to note that the ECSRC project includes all 3 of these. I don't know if you've had a chance to go online and actually look at the elements of the project, but let me just mention them now. First, the ECSRC created a draft policy framework 2 years ago, sort of spelling out based on best practices in Europe, the US, and so on, markets that have been successful at crowdfunding. They put something together. And so the first element of the project is a series of stakeholder consultations, which we've already held back in September, to validate the policy framework, to make comments, to refine, etc. The second piece of the project speaks to regulation. The second piece speaks to user capability, which is, do we have companies out there that are knowledgeable, willing, ready, and able to take advantage of a crowdfunding project or program when it's launched? And here again, the project focuses on building awareness throughout the OECS and providing training, such as what we're doing today, to educate both locals in the ECCU countries, but also in the diaspora about crowdfunding, what it is, what is the process, how do you actually mount a campaign, what are the risks, what are the advantages, et cetera, et cetera. And then finally, the third piece of the project deals with technology, which is the ECSRC is inviting ICT companies that are interested in developing a platform to come into a sandbox, a protected environment to actually test their prototype with a view to the policy framework. So we've already dealt with the first piece, which is the regulatory framework. We are now refining the rules based on all the comments we got from those stakeholder consultations last year. We are now in the process of going through the training program. We are still running awareness raising through radio interviews and so on, and other appearances throughout the ECCU. And then in about a month or so, we'll be launching the sandbox, which is a technology piece. Any questions about the project before I go on? Okay. So here I just wanted to show you the elements of the ecosystem, right? In terms of user capability, the key players that are dealing with that would be the entrepreneurs, investors, and the small businesses, private sector associations that would be training small businesses to actually understand crowdfunding and prepare them for actually launching campaigns. The investors, the diaspora, and so on would be, we would need to, and we've done some of this already, doing awareness raising sessions for them to understand what this would mean in a Caribbean context and how to engage. And of course, entrepreneurs such as yourselves who are in this training session. And then of course, the regulatory aspect, which would involve the ECSRC and Ministries of Finance and so on, and the legislative bodies who ultimately would pass legislation to sort of, what should I say, to enshrine the rules developed by ECSRC into legislation. And then finally, the crowdfunding platforms themselves, or platforms that will be operating in the region. So each of these key players in the ecosystem then has a particular role to play in terms of developing and enhancing equity crowdfunding in the ECCU. Okay, I am going to just now go through some key points to remember. As an entrepreneur, you'll need to take a different approach with equity crowdfunding than you would if you're raising money from an angel investor. The marketing aspect is key. Your business model is key, because remember now you'll be competing with other companies who are also raising funds. This is a little bit different than conventional equity. You're still competing in conventional equity, but here it's, an investor can basically go shopping on a platform, just looking at different companies and deciding, which company has a more compelling story to tell that would move them to actually invest, right? So this has to be borne in mind when you're putting together your campaign, right? So your business model is important. It has to be easy to be understood. It has to be scalable. It has to be compelling. And to some extent, you have to appeal sort of on an emotional level to that investor, right? Also, like conventional equity financing, you need a pitch. Among other things, you need a pitch, you need a video, you need other things. In my next session, we'll be taking a more deep dive into what the campaign looks like and what the various elements of the campaign are, to give you some idea and some guidance in terms of what's required. Also, when you're making a decision to pursue crowdfunding, you've got to consider the advantages, which we talked about, the risks, and perhaps most importantly, the differences with other kinds of financing. Because, you know, truth be told, equity crowdfunding might not be appropriate for your business at this point in time. So you have to really know the different financing instruments, what are the pros and cons of each, and then know your company as well, and know your own tolerance or lack thereof for control over your company. Are you willing to cede some of that to an investor or not? Are you willing to be fully transparent on a platform about your company, so that whoever can make a decision to invest? Those are the kinds of things you need to think about as a business owner before you make a decision one way or the other. And then just to bear in mind that unlike traditional equity, in crowdfunding, there are no complex negotiations. It's a situation where you host your campaign, investor looks through your information, looks at your video, et cetera, might come back to you with some questions via the platform. But ultimately, there's no face-to-face negotiations. It's either yes or no based on what you've put in your campaign. So that campaign is really the key to whether you receive funding or not, and whether ultimately you have a successful campaign. So that's all for now in terms of this session. I'm going to open up now for questions. On the next session, we're going to take a deeper dive into crowdfunding, the elements, and so on. We'll talk about valuation and other things. But this is just to sort of give you a first blush about equity financing as a financing mechanism for small businesses, what it involves, and then to start introducing the concept of equity crowdfunding and the elements.
So, Dr. Leslie, thank you very much for that. My more of a comment. I think one of the key things that you mentioned was the fact that persons have to realize that they will open themselves up to a lot of scrutiny, and that once you come to the table, how do you protect then your idea, from being sort of taken or stolen or anything like that? How do you protect it in these kind of platforms?
That's a very, very good question. First of all, if you have an innovation, it needs to be protected. Your IP needs to be protected, right? That's the first thing. Secondly, the platforms have a responsibility to vet. Again, and there are elements of the rules that speak to responsibilities of the platform. And one of the huge responsibilities for platforms is to vet not only companies, because I've neglected to mention that as a company, you have to sell yourself to the platform too, to convince them why they ought to host your company, but they also vet investors, right? So there are certain responsibilities and protocols that investors need to agree to before they can actually be playing on that platform or engaging on that platform. But I would say first and foremost, you must protect your intellectual property. A lot of companies don't think that's important, but it is. From a point of view of a conventional angel investor, that would be something that would be brought out in due diligence. But in a crowdfunding situation, the investor generally speaking, doesn't really care one way or the other. So it's up to you, it's incumbent on you as owner to protect yourself. I hope that answers your question. Oh, by the way, I put my email in the chat, winsome@devsolutionsmd.com. If you need to reach out to me after this session for any questions, feel free. Shanette asked a question about, I'm wondering if you consider have participants who are interested in networking to have their information added to the chat. Actually, that's a very good idea, Shanette. Anyone who wants to network with anyone here, please just put your information in the chat so that folks can exchange information. I see Christopher has done his. That would be very useful for follow-up afterwards, because there might be synergies between what some of you are doing. So I would urge you to do that. Christopher, you said you're in Jamaica?
Yes, I am currently.
Yeah, you're in Jamaica.
Yeah, but originally from Trinidad and Tobago.
Okay.
So that's how I know Roxanne and Polly.
Okay, so the fish waste to fertilizer project it's funded by who?
Well, currently it's actually self-funded, and well, amongst a team of us who is actually managing the project. So we fall under Carbonless Solutions, and we have been implementing the project in Belize currently, but we do have support from the WIPO and the IDB.
Good.
So
good.
we are now part of the Compete Caribbean focus to help to expand the project. There are two elements that we are looking at in the further expansion. So one is actually scaling up the production of the organic fertilizer in areas where that is possible. So right now, in terms of the quantities of fisheries that we actually need, Jamaica and Belize.
I just lost you.
But
I just lost you.
We because again, we have a relationship with rain forests, and because of that, you'll find that Jamaica and Belize was the best currently. However, also looking into, as another part of the scaling, is to start to produce the equipment at small scales and at a scale that could support community farmers and possibly single farms to actually do this at their own capacity, you know,
right.
At that scale. So that way we'll be actually selling the equipment. So we have already started with, through the same relationship with WIPO and others, we started to develop the prototypes and prototype it and engage customer discovery process around the equipment aspect. We already did the customer discovery around the fertilizer aspect quite a while ago.
Yeah, so you're sort of doing a supply chain. So you'll have these farmers basically into your supply chain and basically giving them or selling them the equipment, yeah?
Yes. I can
Good
always
idea.
show the concept. So and because we're working with the World Intellectual Property Office, you'll find that a key part of the project was really about protecting IP. So that's why I was so eager to tell the members that it's very important to probably start to connect with your intellectual property office in your location.
Absolutely.
You know, and start to pursue your different patterns and so on.
Let me just say this. I think that a couple of things. First, this project that ECSRC is doing is a pilot. They're obviously, this is sort of to stoke the fires, to get things going. The outcome of this project should be that one or two platforms emerge that will actually now go ahead and launch something, a crowdfunding play in the Caribbean. I happen to think that certainly for the Eastern Caribbean, equity crowdfunding makes more sense than conventional crowdfunding, simply because of the size of companies and the money to be raised the funding needs, all things being equal, would be smaller than perhaps even angel investing. And so if we can get this going consistently, it would be a huge game changer for the ECCU, I think. But so on the one hand, the regulation and the IT platform side, I'm not too concerned about. I think and I'm coming back to Sam's point again, where I find a concern is getting companies not only aware about the possibilities of crowdfunding, but also getting them actually ready to be on a platform, right? And so, and it's not only just learning about equity as a concept and how it works, but it's also, as Sam says, it's things like making sure that if friends and family or you borrowed from them, that these are bona fide agreements, that can stand the test of time and so forth, getting your operations in order, getting your books in order, et cetera, having a proper organizational structure to the business. Because the reality is that, as you all know, commercial bank lending and grants are not going to be enough or currently are not enough to really satisfy the financing needs of companies. And so we have to look at other kinds of options. And I think certainly equity crowdfunding is working very well here in the US. There's no reason why it shouldn't be an important part of the access to finance spectrum in the Caribbean. I think, Christopher, you had your hands raised?
Yes, I actually had a question that I wanted to raise with you in terms of one of the challenges, because again, apart from the IP that was mentioned by one of the participants, another critical challenge is even the whole aspect of the regulatory frameworks to protect, to protect the companies from, basically, for want of a better term, working with less than honorable firms, so there's not really much of a strong regulatory framework. So and just for want of an example, we could take the FTX situation in the Bahamas as part of just one small part of this whole wider financial, the inadequacy of a solid financial regulation and standards. And if we look at if anybody looking at the news just this week, we could see that we have the issue with even Usain and others. MP and others with regard to the poor oversight of a financial investment firm where persons were actually liquidated customers' assets without their permission.
Yes, which is interesting. I hear you, because the other thing too is that and I know that there's a credit bureau that's being developed in the Eastern Caribbean, but also there needs to be some things done at the stock market level, because if you don't want to have investors speculating and buying shares today and selling them tomorrow, but you have to think about an exit. So there needs to be a secondary market to be able to let investors dispose of their shares if they so wish at some point, right? So there has to be, let's put it this way, the elements of this project are not a panacea. There are other things that need to happen. So we're trying to see how we can collaborate with other partners, other elements of the ecosystem, mainly the stock exchange, the OECS Commission, et cetera, to see how we can together build something that can really enhance and support a successful crowdfunding operation in the ECCU. But I take your point. We wonder, there are rules out there, obviously, but maybe either they're not tight enough or they're not being enforced, because how could a reputable, quote unquote, investment company run off with Usain Bolt, millions of dollars from Usain Bolt's account. You know, I mean,
Yeah,
there are certain.
40, Usain is one of 40 persons.
Exactly.
MP was on the list and all too.
So I'm just trying to say, how, I mean, when you become a financial advisor here in the US, yes, you have to take an exam, you have to be certified, but there's also a code of conduct that you have to adhere to. And if you don't adhere to that code of conduct, you go to jail, right? So there is scope for a lot of tightening up there. And I think too, you raise a very good point about protections on the platform for the businesses raising capital. I don't have the rules in front of me, but certainly this is something I will raise with the ECSRC, and also to Vincent's point about them taking your IP as well, to see to what extent we can put in the policy framework that kind of language. This is beyond the scope of what I do, but I can certainly raise it to see to what extent, because the policy framework is going to form the basis for legislation. So can you hear me? Hello?
You actually cut that language for me. I don't know if it's for the other persons as well.
No, I was just saying that their rights and responsibilities set out in the policy framework that ECSRC designed, that speak to responsibilities of the platform, responsibilities for entrepreneurs and investors. But I'm certainly going to raise these points with the team to see to what extent there can be protections included for protection of businesses raising capital, and also the issue of taking IP, stealing ideas. Well, to what extent the rules can speak to that? Again, I don't know, but I will raise it. Because your points are well taken. Because there's a lot of fear, I know, around founders who feel that when they make a pitch to an investor, for example, that investor could take their idea. There's a lot of fear, and this is partly accounts for why some founders who could actually benefit by equity investment, they don't do it, because they're like, nah, I don't want to expose my idea to folks who might just run with it, So I think that the issue of trust is very important,
Will we receive the answers to these questions that you're going to pose to your board, or how will we receive
this is not the board. This is the ECSRC that's designed the project. There's a policy framework that was designed. Right. So the commission designed the policy framework that was validated. We had several stakeholder consultations online where people commented on the public. Basically, we invited anybody to come. We had government officials, entrepreneurs, investors, IT firms, etc., to comment. We posted the rules online. I think there still are on the website. Asked them to make comments on the rules, and we discussed that in several meetings. So I will go, the person who's working on the rules specifically, I'll go back to him to pose these questions about whether the rules speak to these issues, and if not, can they speak to these issues? I will be seeing you next Friday, so I can certainly, give you some idea or point you in the direction where in the policy framework some of these things are addressed, if that answers your question.
It does. Thank you so much, and great to hear so far.
Yeah. Any other questions? We have a few minutes. All right, let me ask you this. Let me turn it back to you. Based on what you've heard so far, and based on where you are in your individual companies, or some of you are actually business support, organizations. Are there particular issues that you want me to deal with next week? I mean, I already have something prepared, but just to ask, is there anything you want me to emphasize or stress or raise next week?
Vincent here. So, you know, I think it's a brilliant sort of synopsis and topic that we're discussing. One of the things I wanted to find out was, you know, you spoke of the ecosystem and the different players inside of there. You know, the individual who is looking to sort of seek funding from the you know, equity crowdfunding, he has to prepare his pitch deck. Yeah.
Among other things, yes.
Among other things. Where do they go to get that done? And are those persons, the persons who they go to, do they have to be certified? You mentioned, you know, if you are an advisor in the US, you have to be, I guess, certified or regulated in that instance.
Yeah, if you're a financial advisor, yes. If you're a financial advisor managing somebody's investment portfolio, yes, absolutely.
Right. But so if someone is in the region and they are interested, you know, the young entrepreneurs we have on this call here, where do they go now to say, okay, I want to be able to participate. I want to, you know, have more funding. I want to have the equity investor help me fund to reach my goal. Who do they turn to say, help me with this deck, help me get through the due diligence, help me negotiate, help me prepare a term sheet, or, you know, that sort of thing. Where do they go for that?
Okay, so there are two issues here. One is looking at conventional equity, angel investing in this case, or crowdfunding. When we had the stakeholder consultations, one thing that was validated for us is that there needs to be an entity or an agreement made with several business support organizations who are qualified and versed in putting pitches and campaigns, quote unquote, together to work with firms. For example, in the case of Arawak X has trained and I don't want to say certified because it's not really a certification, but blessed several business support organizations in Bahamas who work with the businesses to get them ready to present their campaigns to the platform. Of course, these campaigns are vetted by the platform before, you know, a decision is made to have them list. But there's a preparatory phase, and Arawak X has made sure to organize that so that the firms know you go to A, B, or C, or D to get your pitch deck done, your video, you know, the other elements of your campaign together for presentation back to Arawak X for them to say yes, no, whatever, right? So you've hit the nail on the head. We've realized in this project that we are going to need a similar arrangement. However, it's beyond the scope of the ECSRC itself to do, but the ECSRC in the process of this project and its partnerships can partner or figure out which entity or entities in the Eastern Caribbean could take on that role. And those folks will have to be trained, like you all, in equity crowdfunding, in putting a pitch deck together, etc. Right? So that's a second piece that has to come. And the beginning phases of that has to be done in the context of this project, and we know that. If that makes sense.
Yes, thank you.
But let me just say this also. We're going to be having a series of discussions with all the chambers of commerce in the region and other small business associations, et cetera, around the project. And this is one of the things that we want to raise. You know, how can we organize or designate certain entities to start the preparatory phase, to start thinking, in other words, as part of their curriculum for training for small businesses, can we insert, a quick crowdfunding component or something to start, one, making small businesses aware of this, and two, to actually making the organizations themselves au fait with what crowdfunding is and what it means.
I will say one thing.
Does that answer your question?
I know that.
1 second, Christopher. Vincent, does that answer your question?
Yes, it just, I mean, it does cause now the entrepreneur in the room to say, well, okay, what do I do? Do I wait for those individuals to appear? Or do I try to put together my deck myself, go to my local accountant or go to Vincent Boland and ask him
the project is not ready yet, though. I mean, no crowdfunding platform is yet launched. It's not launched. So if I were to give it, because it's not going to be launched until the sandbox process is done. This project is over in June. It's not going to be launched because out of this project, we want to have a platform or platforms identified who would then launch their thing, right? We're going to give them templates for certain kinds of agreements and will have to do with the entrepreneurs and investors and so on. But this project is not launching a crowdfunding platform. We're facilitating the emergence of one or several for the ECCU, right? So if I were giving advice to the companies on this call, I'd say, look, guys, let's take the temperature, see where you are. Do you have your ducks lined up in terms of your books, your operations, et cetera, et cetera? I would say if you're seriously interested in raising money on a platform, then work with your business support organizations or work with you, Vincent, whoever, to get ready so that at least you have the minimum requirements needed. You don't have to do a pitch deck this minute, but make sure that you have your books together, you have your financials in order, you have an accountant, you know, these kinds of things, you know?
Sure, thank you.
So that's what I would advise. Take this year to get ready. And the beauty about it is that even if you ultimately decide not to go for crowdfunding, it makes you attractive for other kinds of financing, even a grant. You know,
Leslie?
so, Hi, Shanette.
In the meantime, while the platform has not been launched, Compete Caribbean recently had a workshop for persons who were interested to join the competition, and they actually had workshops on how to make a business pitch. So perhaps if persons go to the YouTube channel or website, they may be able to find information as to how to go about preparing a pitch and actually how to deliver the pitch.
But even so, but let me just go even further. On YouTube, there is let me type it in the chat, and I know we have to go.
There are quite a few of them.
There is something called SlideBeam. Let me put it into the chat. SlideBeam. Go to YouTube and look for that. It talks about pitching, how to put a pitch deck together, what are the elements. There's a lot of information, but I've used this in my class. I've shown slides from SlideBeam. So you can also, you know, prepare yourself by you could put a pitch deck together if you want, just to kind of see, you know, how do you stack up vis-a-vis what they're telling you on a YouTube thing, or even if you have a chance to look at the Compete Caribbean training, you know. Shanette, you had a question.
Oh no, that would have been my contribution.
Oh, I see. Okay, thought you had another question. All right, thank you. Any other last words, comments? It says here, Walker Distribution, business owners should set up their businesses for continuing long term. Yes, yes, yes. New opportunities, lots of great businesses. Yes, yes, yes. Yes, absolutely. Absolutely. The other thing you have to ask yourself, guys, and this is my parting shot. is your business just necessity based, or you're thinking more of you're doing something to fill a need, you want to be constantly innovating, et cetera, because the companies that are looking to fill a need and to constantly innovate, and here I'm thinking about pumpkin butter, these are the companies that are going to be attractive to investors. You have to think about, there are things like factoring and leasing and factoring that are also coming on stream in the Caribbean as well. So it doesn't hurt, coming back to it's a Walker's point, getting your house in order doesn't hurt because it opens up the possibilities for a variety of things, right? So it's that there are other sources such as, yeah, that's true. I just cited one. You can go on Google pitch deck preparation on YouTube and you'll see millions of ways to do it. So, but the important thing is just to start and to educate yourself. Okay. So if there are no further points or questions, thanks so much this was a very engaging session. Thanks for your attention. And we'll see you next Friday, same time, for the second half of the course. I hope you found this useful.
Thank you very much. It very was.
Thanks a lot. Take care. Have a good weekend.
Thank you. You too.
And reach out if you have any questions. You have my email, okay?
All right, bye. Have a good weekend.
Thanks so much. Take care.
Bye. Bye.